We're excited to have Paul Olson on the webinar today. He's actually my personal CPA, and he's been a gem. He knows what he's doing, and he's current. He's a young dog, but he has tons of experience. And so, but yeah, Paul, let's kick this thing off, dude. I'd love for you just to share quickly a little bit about your background.
So a little bit about me. Originally from St. Louis, Missouri, actually. Did serve a mission. Came home. I was playing football at Brigham Young University, but I wasn't on scholarship. I was what's called a preferred walk-on, a lot different nowadays. So I actually had to pay my way through school while I was playing football. When I left home, my dad told me it was on me. And so I actually sold satellite and alarms after practices, before practices, when I could. And I was actually having a lot of success selling door to door. And same as you, Brad, I wanted to keep more money in my pocket. And so I started studying about ways that I could actually write off business expenses, what I could or couldn't write off from my income, and ended up studying tax and accounting at Brigham Young University. Got my master's degree there. Sat for the CPA exams, and honestly have been passionate about helping. Started with myself, but helping small business owners, entrepreneurs, keep more money in their pocket and do it in a legal way. So that's a little bit about my background. Married, 5 kids, coach sports, involved in my community. I love to get out to the ranch sometimes, but that's me. Know a few things about tax too.
Yeah, dude. Thank you. Thank you for sharing. So 5 kids, you're busy, sold door to door before and after practice. For a lot of us, we just did door to door and that was enough. But having to deal with football and all the physical side to that and all that craziness, that's doing crazy.
Good times, good times.
Where'd you serve your mission?
Chile, South America.
That's where I served, bro. I don't know if we ever connected those dots.
We did connect on that.
Dang, dude. I got a bad memory then. So yeah, let's jump in. So a lot of these guys on this call, can you please, if you're in the chat, can you just mention, like, are you looking for some tax information or just some ways to leverage your income because you're an individual? Put in there if you're an individual, if you're like more of an owner, if you're looking to, I know everybody, Paul will get into this. You want to like own your own entity, your own LLC. And so you're like an owner of your own individual business, but tell us if you're more of an owner or if you're more of an individual. Great. So we got some individuals there, few owner, sales rep. Okay. So, yeah, let's jump in and start with like the individual sales rep. Paul, if you were to go back in time and you're like, you just, got done with BYU football, someone asked you to come do door-to-door sales, and you know everything that you know about tax. What happens typically is guys get into this and they start making good money, and then they used to work at Costco, and that now this 1099 gets, put on their, they get this emailed to them or mailed to them, and they're like, "What's this?" And they're just way late to the game. But if you were getting into door to door, what would you do to prepare to be set up the right way?
Yeah. So I tell my clients this all the time. So if you're going to be in a space where you're going to be paid at 1099, so you're not W-2, they're not withholding any taxes out of your paycheck. My recommendation, if you are going to make $40,000 or more, first step, set up an LLC and make an S election so that LLC is taxed as an S corporation. That is number one. The reason you want to do that is you pay a lot less in self-employment tax, which is 15.3%, if you have your income being earned by your S corporation versus it being earned by just you individually. Next step is you're going to go set up a bank account for that S corporation. All your income, your deposits are going into that bank account for that S corporation. You're not mixing business and personal funds. Okay. From there, you're going to ask your employer, hey, will you send my 1099 to the name of my S corporation, not me individually? You are two separate entities now. You are the owner of your business, but as far as the IRS is concerned, you're two different people, two different entities, right? Those are like the first three steps I would make. One, decide if you're going to make more than $40,000 a year. If you are, get the S corp set up a bank account for that S corp, reroute the income so that it's going into the bank account, and then make sure your 1099 comes in the name next year of your S corporation.
Yeah.
Those are
So
four very quick, important
as an
things.
individual, you have your social security number as like your identifier with the government. And then as an S corp or an LLC, you have a EIN number. And
Exactly.
so when they get that set up or they're looking to do that, is that something you guys would provide and help them set up, or is that something where they need to go work with an attorney? Or in some states it's easy. In Arizona, you can do it in 15 minutes if you know what you're doing. But is that something where they could reach out to your team and that you would help them set up their S corp? Or
Yeah, we've set up plenty of S corp. So some people do it on their own. Most of them screw it up if they do. We set them up. An attorney could set them up. We're probably charging a lot less than an attorney is charging to set up LLCs. But yeah, it's a good question. Our firm sets up lots of those all day, every day.
okay. Yeah, just because I know sometimes they hear, yeah, just go get an LLC and do an S corp and then call us, and it's like they're already stumped. And
Yeah,
so
yeah,
I remember being there and people were giving me this information. I'm like, I don't. That's why I looked for someone like Paul for so long. I spent hundreds of $1,000s in taxes over the first like 10, 12 years before I found Paul and his team. So if you're looking to get this set up, you can Google it. You find an attorney in your local market that can help you do it. If they're trying to charge you more than like $300 to $400, they're just probably gouging you. It's a really simple process. It's just state by state, so there's not just one video you can follow. But every corporation commission in every state, and Paul, tell me if I'm wrong, but you can set this up, and a lot of them you can do it yourself. But it's just like anything, if you're doing it for the first time, it can be kind of cumbersome and weird. So maybe it's worth the $300 to $500 to pay.
what gets weird, what people miss on that is, I mean, just for reference, our firm charges $500 plus state fees to set up like an S corporation for someone.
Yeah.
A lot of people know how to go to the state and file for an LLC. That is not the same as setting up an S corporation. An S corporation is an LLC that took the next step and filed a separate form called an S election, Form 2553, with the IRS as well. And that form is very important because without it, you're not an S corporation. You're just an LLC and you don't get all the tax benefits of an S corporation. So you got to set up the LLC, make the S election. Now you're an S corporation. And people miss that middle step oftentimes when they're just doing it themselves or uncle's helping or whatever, right? So don't miss that if you are doing it yourself. And that's why we get involved. So those documents don't get missed. But
Gotcha. Yeah, we have someone in the chat that says, ouch, I just paid $1,850.
yeah,
So,
there you go.
you
Yep.
know, the attorney route, sometimes if you just Google it or whatever, someone also said go to use LegalZoom. They walk you through step by step.
Yep.
That's probably
Yep.
a guided option is LegalZoom. Like I said, Paul has an option for $500 plus fees. Plus fees, like in Arizona, if you want it expedited and done like next day, it's like $85. So you're looking like $585. If it's not rushed, which this time of year it's not going to be rushed at all, you can just I think it's like $35
Yeah.
for the
Yeah.
non-rush fee. There's like a $50 expedited fee. So the fees he's adding to the 500 are going to be probably $100 or less, depending on the market you're in. Someone
Yep.
asked, what form is that you mentioned?
Yeah, so that form, very important. If you Google form 2553, 2553,
25.
that is the form that has to be filled out with your LLC so that you're telling the IRS, hey, I want to be taxed as an S corporation.
Perfect. Perfect. And someone asked, what is the name of your company?
Our firm is Welch Olsen, CPA firm.
WELCH Olson. We'll throw something up at the end, a QR code, or we'll figure out a way for you to get Paul's information here.
Sure.
Um, And so you better have your rep card set up, bro. Um,
I've got a rep card set up actually.
let's go. So we have someone just with iPhone 63 raising their hand. Let's see. I'm just going to allow them to talk real quick. We're going to just freaking collab. Oh, they lowered it. So they are gone. If you wanna jump on and chat, dude, we're just keeping this thing open. Um, so they get the LLC set up, they make it an S-Corp. That avoids them paying not all 15.3%, right? It's
All
just
15.3%.
about
Yeah.
half of it, right?
So the reason you do the S corporation is so that you can pay yourself a small W-2 salary, and that small W-2 salary is subject to the 15.3% self-employment tax. But the
Gotcha.
beauty of the S corporation is S corps allow you to take distributions, and distributions are subject to 0%. I don't know if you can see my hand, but 0% self-employment tax. And so if you make $100,000, go pay yourself 30 grand in W-2 salary and take 70 grand in distributions. And that 70 grand is subject to 0% self-employment tax. If you do not have an S corporation and you just have an LLC, that is not even available to you. You have to take all $100,000 subject to that 15.3% self-employment tax. So
Yeah,
it's a
so you
lot.
immediately lose 15,000 bucks, versus the other way, you're going to pay 15% on the 30,000 and keep the other 70. And so you can see, guys, just by
And
having,
what and most of the time what I see, Brad, is someone will make this mistake a year or two and really just get hammered. And then they're like, all right, I gotta change something. And so that might be where some people are at in this process of, God, I got hammered once or twice. Now I'm gonna really pay closer attention to what's going on here.
yeah, yeah. And guys, like if you look at any wealthy person, they probably own real estate or different assets, and it's not so much because they love real estate and it's their favorite thing ever and they want to have houses everywhere or whatever. That may be cool, but most times it's because of some type of tax strategy that they were using to buy real estate to avoid taxes. Like, just taxes are going to eat you alive. They're going to, as you make more money, they're going to become 20, then 25, 30, 35, and up to 40% of your income just goes straight to taxes unless you start doing some type of strategy. And these strategies here are just the basic entry level ones that will start you down the path of tax strategy. And then as you make more income, you can get more in depth with Paul and his team or whatever firm you're using to have them teach you more and more tricks to set.
It isn't that kind of crazy to think about that you're gonna work. I mean, for someone that's around $300,000 for someone that's married filing jointly, like a 35% tax rate, you're working a third of the year for the government. Kind of makes you sick.
Well, it makes you sick. And then if you expand that out, you think that over the course of 30 years, if you and your
It's a
spouse make
lot of money.
$1,000 combined and you pay an average of 30, 35% taxes and don't really put any strategy behind it and just do what most people do and they just pay it in and they just let it happen, that means for 10 years of your life, you worked, when you stretch it over 30 years, it's like for 10 years, you
Yeah.
just gave the money to Uncle Sam.
It's worth your time to educate yourself on appropriate tax strategies. 100%.
Yeah. Um, so they get the LLC, they make it an S corp. You mentioned something about a bank account. Tell them like what the next step is now
Yeah.
that they have
So
the bank
so
account.
from there, yeah, from there, it's starting to implement your tax strategy. It's all right, am I tracking all my expenses? What am I using to track those expenses? Is it just am I using just an Excel file? Is that sufficient for some people? It is starting out. Or do I have like an accounting team? Do I have a QuickBooks file? Is someone handling that as a spouse or a friend or a firm like ours handling the bookkeeping piece of tracking all your income and expenses? Do you know what you can and can't deduct? Getting educated on those things are important and making sure that those are flowing through the right bank accounts. I mean, just to throw a few nuggets out there, Items that maybe you're not deducting that you should be is like your home internet. If you're using internet for business, you should be deducting it, or at least a portion of it. That's a business portion. Your cell phone, you should be paying your cell phone, right? Through the business bank account. Swag, uniforms. People buy clothes, branded clothes, and your clothes don't even necessarily have to be branded to write them off as a business expense.
Yeah, if you're
So
buying a pair of shoes to go knock doors to be more comfortable, you're buying a new hat, you're
absolutely,
buying, you know,
absolutely.
any polo, anything you do, a golf polo, because you're going golfing and doing recruiting, like that all gets categorized as your uniform that you go to work with. And that's costing you money in order to make money. And so you can use that as a write-off. And so what he's saying is get your LLC set up and you can go to the bank and they can start you a bank account underneath your business name. So your debit card will literally have your business name on it.
Yep.
Every time you're buying something, going to lunch, doing things that are associated with your business, your cell phone, your home internet, run those transactions through your business bank account. And then you have all those transactions there. And then you can use something like Rocket Money or Mint, any of these basic tools where you can start to categorize all those transactions. You can sync those up with those products. And then you can just tell it, okay, this was to uniforms, this was to lunches, this was for my phone bill. And you can start to categorize all that. And then at the end of the year, your CPA is going to ask for all of your transactions broken down into different categories. And you could just serve that up to them and they
And for so like I saw some comments about like um segways, vehicles, like any of those items that you're using or assets that you're using for business, absolutely you should be deducting those for business purposes. Your fuel that you're putting into your car, if that's a business trip, you should be deducting that. Um, for a lot of the sales organizations, if you travel for your organization, you should be keeping track of how many days you're out of state for per diems. Um, those you can all write off as well. So just make sure you're taking the time to educate on what it is that I can deduct so that you're not leaving something on the table. I always talk about like we've got to pay our tax, but no one said we have to leave a tip to Uncle Sam. My goal and a CPA's goal is one, get organized, get educated. And yeah, if we owe tax, we'll pay it, but we're not going to leave any tips. People are leaving way too many tips for the government. So
100%. Yeah. And someone just mentioned in the comments, like I was mentioning a few of the apps that I know of, like Rocket Money or Mint or Spendy. But someone said you can also program an AI bot with ChatGPT to assist in keeping track of all your expenses. So if you've got an
perfect.
ChatGPT account, you can just download your transactions every month. And it sounds like you could probably just upload that statement and say, hey, can you categorize this into my Google Sheet? I'm sure there's a few commands you could give it and it'll just continue to update your Google Sheet. So, but you want to make sure that all those transactions are business ones. And so you could easily do that by having your business, checking account and already having that all segregated.
Yeah. Yeah.
So, um, so guys, what other questions do you guys have? Anything coming to mind? Anybody, want to raise their hand and come up and chat with us or, um, any other questions you want to throw into the chat? Someone said, if you don't pay taxes a year or two, is it important to go back and pay those taxes, or do you think the IRS will care or notice?
So there's a difference there. There's maybe they meant not file taxes. So you can file your tax return and not pay the tax that you owe. So maybe get some clarification on that. But if you ever want to go buy a house or get any sort of credit, yeah, I would recommend going back and filing those taxes and catch up. The IRS getting after you, continually getting after you, is not a way you want to live your life. I promise you. It's not fun. It's not comfortable. So I would stay on top of filing your tax returns. Yeah.
Love it.
When you start filing, they will then go find out about the years past that you didn't file because there's a gap in filing. So
Yeah, yeah. Makes sense. Someone said, What about deducting solar panels and how does that work? Getting some money back from the government through tax credit. So Harsh asked that. I wonder if you're talking just about the actual just solar tax, um, like the tax credits that are available to them for going solar. So maybe just touch on that for just a second because that's a
Yeah.
rabbit we could go
Yeah.
down.
So, I mean, just generally solar tax credit, you're getting 30%, right? Of the cost of the system that goes on to the house, right? A lot of people are kind of teaching that to customers when they're selling that to them. But something to understand about that is the solar tax credit is a non-refundable credit. So if you don't owe tax when you file, the government's not going to send you money back for your solar tax credit. If you have a $10,000 solar tax credit and you only owe $5,000 in tax, that means that now you owe zero in tax and you roll $5,000 of credit forward, meaning they're not going to send you the difference back in cash. Some people lose track of that often. That's important to note. But solar tax credit is 30% of the system, and you get that as a credit on your personal tax return. So
Yeah,
$100,000 system,
it's not a tax
$30,000 credit.
rebate. There's a difference between like a rebate where you get it back no matter what, and having a credit that's available to you, but you can't necessarily use it
Yeah.
unless
Yeah.
you do that. So someone said for mileage, should I keep track of miles or gas receipts?
It's a good question. So the way you deduct your vehicle on your tax return is there's two methods. There's the actual method and there's the mileage method. The actual method lets you take depreciation, fuel, repairs, oil changes, all those items. And then the mileage, you just have to track your business miles and you get 70 cents per mile. You have to decide which of those you're going to use. And once you decide which of those methods you're going to use for that vehicle, you have to stick with it until you get rid of that vehicle. You could have two different vehicles that use two different methods, but once you've applied a method to that certain vehicle, you got to stick with it. Now, if you have a really expensive vehicle and you don't drive a lot, I would probably take the actual method, depreciation, fuel, and all that. If you have a beater that you're just driving all over the country, you bought it for 15 grand and you're going to run the wheels off of it and drive 40,000 miles a year, I would definitely be taking the mileage deduction. So depends
Gotcha.
which one.
Now, as far as the mileage, how, and I know this is probably a little bit of a gray area question, but how detailed do they need to get with miles? Is it just like, hey, I started the year and I had 150,000 miles on this vehicle. Now I have 190, so 40, and I used about 90% of my vehicle for business. So they just kind of do the 40,000 times 90%, and that's kind of their number, or do they have to have like an actual log and
So technically, you are supposed to have a log. Most people will use an app because the app will just log for you. I would recommend using an app. Um, I sometimes people are like, "Hey, I don't have a receipt for this. Can I? Does that mean I can't deduct it?" No, I would totally deduct it even if you don't have the receipt. But you want to be audit proof, I guess. What I help my clients do is, hey, let's prepare for if we were to go under audit, we're ready. We're not losing sleep, right? So keep receipts, do the logs. But if you didn't happen to do those, or you're just learning about, oh gosh, I'm supposed to do that, I would still deduct all those expenses, just correct it moving forward. So if you ever do get audited, you're in good shape.
yeah, 100%. Love it. Someone said, let's actually bring up a few of these people real quick and we'll get back to some of those questions. We got Ray here. Ray, what's up, dude? Looks like you're on mute. Now you're unmuted. What's going on, man?
Hey, what's going on, guys? Thanks for letting me speak real quick. I just have a couple of questions going back to the differential between that 70 cents. Is that including gas? I missed that. Or can you write off gas on top of that 70 cents per mile?
You cannot write off gas on top of the mileage deduction. So once you
Okay.
decide mileage, that's it.
Okay, no problem. And then, yeah, I mean, I use QuickBooks just for you guys. It does auto tracking. That's pretty much what I do to track all my trips. Pretty much
Yep.
at the end of the day, I settle them up, but that's just what I use, and it works pretty easy for me. And then, just real quick to go back to the vehicles, and writing off vehicle payments. Does the vehicle have to be registered in the business or personally, and I could still write it off?
So the vehicle does not have to be registered under the business.
Okay.
What you're technically doing is you're contributing that asset to the business. And if
Okay.
you're using it for the business, you can still write it off, even if the title is sitting in your personal name. Great question, actually.
Okay. Perfect. That was it. That was it for me, guys. Thank you. I appreciate it.
Appreciate it,
Yeah.
Ray. All right. If anybody else wants to come up and chat, let us know. We're right here. Let's keep going here. Okay, so we have a few asking for a friend. I have a rep that's filed but hasn't paid in 2 years. Another guy I know, it's been 10 years. What does the IRS do?
Uh, I mean, worst case scenario, what the IRS does is they start to levy assets. So they'll freeze bank accounts, and obviously tank your credit, making it nearly impossible for you to go buy a house or any significant loan. Um, you can set up payment plans with the IRS, so that they're flexible with, the best thing is to be communicative to the IRS. It's okay if you're behind in taxes, but if you communicate with the IRS and set some sort of plan, to catch up, they're usually pretty good to work with you. The second thing I'd say, look at your tax returns. Were they filed correctly? Do you actually owe that tax? Maybe you need to amend your tax returns, and there were a bunch of expenses or strategies that you should have implemented that you didn't. But yeah, don't fall behind on your taxes.
Yeah, and one thing I'll say is that when I met Paul and kind of came to him with my situation with my CPA dying and trying to, it was right during tax season. I had to find someone else real quick, and we kind of got sideways there. Is that Paul, like, he can help you amend. He can look back a year or two and go, okay, wait a minute, like whoever you were using did not give you much strategy and you overpaid by $12,000. Like, let's go back and amend those years and run a different strategy. And maybe that means you get money back. Maybe that means instead of paying 10,000, you're paying two, and that can be rolled over or whatever. So it's not like once you've paid it, you're done. If you find a team like Paul and his team, like they can actually help you go back a year or two. It's probably not smart to just go back like lifetime, depending on how many years, but maybe it's smart to go and say, hey, I haven't been doing much. What can I pay you guys to look back a year or two and just see if there's five to 15, $20,000 in tax savings that you could basically start with. That'd be a great feeling there. Someone said, as a solar salesperson, is there an advantage to selling a system to myself overpriced for the tax credit, even though I'll end up making that overpayment as a 1099 commission?
That's a that's a really good question. The IRS has what's called collapsible transactions when they look at a deal. Like, could you do that and get away with it? Potentially. Yeah. Yeah. Like I said, I don't work for the IRS. I don't even like the IRS, to be honest with you. I want my clients to be compliant with the IRS. The IRS, if they looked at that transaction, which the likelihood that they do is probably pretty small, would call that a collapsible transaction, meaning the substance of it doesn't meet the form, that qualifies for the credit, meaning you sold the system for a lot more than it was worth to maximize the credit. But whoever asked that question should try it and let us know next year.
Yeah, dude. If you call in from prison, we'll take your call. Okay, we've got time for just a few more. So we got about 5 more minutes. It's 2:10 where we're at. So we got about 5 minutes left. Please throw in the questions. And they can be questions. Let's open it up. If they're questions for me or for Paul, whether it's about taxes, business, family, whatever, we're open book. If the solar tax credit is non-refundable, what does that mean for finance companies receiving the credit through ownership of a system via PPA?
So those companies or the investors in those companies owe tax. So that tax is going against money that they owe to the IRS. That's why they would want those credits.
Yeah, so in those PPAs, the homeowner doesn't get the tax credit. The owner of the PPA does, which can then be funneled through to the business owners or the owners of the PPA company. But ultimately, the tax credit's still getting utilized. They already have the tax appetite. They already need to pay so many taxes. So they use the tax credit from the homeowner, and then they turn around and give the homeowner a better rate on their utility bill. Because of the advantage that they got, they kind of pass it back to the homeowner. If the homeowner's a family that only makes $60,000 a year and they've got 4 kids, they're not going to pay many taxes. So selling them a solar loan it's okay. It's just they're not going to be able to take advantage of that 30% tax credit. It's going to be better off for them to get a PPA, let the PPA take advantage of it and give them kind of a kickback through their payment. So
100%. Answered it better than I could.
yeah, so the IRS, can IRS see Cash App transactions? Is there certain things you can get away with?
Yeah, actually, so just recently, so Venmo, Zelle, some of those others, they now have requirements to report back to the IRS over a certain dollar amount. And so the answer to that question is yes. The IRS can see those transactions.
Gotcha. Okay, we've got one more question here on the chat, and then we got Ray. And then, guys, if there's any other questions about anything from taxes to rep card or family to freaking whatever, let us know. Paul, how big is your team? How accessible are you during the tax season or off season? Do you charge for phone calls?
How big is my team? So we're a boutique CPA firm. We're probably about, I think we're 22 employees at this point. So not massive, not small. How accessible are we? The way that we're set up is our firm has different service packages. And depending on which of those packages fits best with you, kind of determines, who you're working with. Anyone that's coming to the firm, initially probably will have a phone call with me, one of my partners, and make sure we get you situated with what's going to be best for you. Do we charge for that phone call? No. I have a link that I let people schedule free calls on, and see if we're a fit for them or if I can help them in any sort of way. But depending on the package that you sign up for would determine if you're working directly with me or if you're working with some of my staff. Ultimately, it all sits underneath my umbrella, and they do really good work. But hopefully that answers that question. We tend to think with that strategy, we are more available and responsive. Communication is key in a small CPA firm. CPA firms can grow too fast, and you never hear back from your CPA when you ask a question. I would go to bet that most all my clients say, yeah, we've got access, we have communication, we get answers to questions, and things can move forward. Speed is important in business, and we think we provide that. So
100%. Yeah, I'm a witness. So I put on there in the group chat, I put Paul's rep card in there, and his Calendly link is tied there. So you guys can go there and book a free consultation and kind of see where you're at. Now is a great time to do it because Paul's team is obviously working on all the extensions that they did, but it's not the crazy rush of January 1st through
it's true.
15th. So it's probably a really good time. We're not doing this call, and you have time in the year to still strategize and to do a bunch of stuff and make smarter decisions, versus waiting till March 15th and you're like, oh my gosh, I need to do something. So let's go to Ray again here. Ray, you're on, brother.
Yeah, guys. Yeah, real quick again. Look, I've dealt with the IRS before with previous business. Just pay your taxes so you don't open up a can of worms and have them even try to audit you guys, because the formulas that they use, even if you owe 20 grand and didn't pay it and you get audited, they're going to say you owe 40 grand and you have to prove it that you owe the 20 and not the 40. It gets over exaggerated and it becomes a whole back and forth battle, and you end up having to prove yourself that you don't owe more than what they're saying. At least that's what I've dealt with through a restaurant that me and my brother owned, and it was just a nightmare as far as that went. And yeah, you don't want to deal with the IRS. So any of you guys that are holding off on paying your taxes and stuff like that, I'd say just clear it up and be on the up and up, so you don't open a can of worms going forward, because they're gonna stick extra money in there and hope you pay it, versus, and you have to prove yourself that you don't owe that. So it's just an extra thing that you have to go through, and then they open up your books to them, and you don't want to, you don't want to show them certain things and things like that. And I'm sure Paul could probably attest to that if he dealt with them before and things like that. But yeah. And then real quick before I go, love the app, Brad. It's been super helpful, and it's been really, really, really helpful for me to just get going in this industry. So I appreciate it.
Appreciate it, Ray, man. Much love, dude. So yeah, you heard it straight from Ray. The IRS, they're not gonna use any strategy to try to show why you should pay less. They're just gonna say like, look, you made 100 grand, you owe us 32% of 100 grand, give us 32,000 bucks. And you're
Exactly.
wait a minute. I bought uniforms, I bought a car, I spent all this money in order to make the money, which is what's called a write-off. Any money that you had to spend in order to do your job is what you can write off. And so you say, I made 100, but it cost me $20,000 in order to make the 100. So I only owe taxes on the 80. And then from there, you have strategies to have, kind of like more write-offs or more strategies built into that. But ultimately, yeah, if your strategy is just I'm not going to pay it, then that's not good either. So cool. So one other person said, we'll wrap it up with this. Brad, will you have more webinars on the app and how to maximize referrals, etc.? Yes, we're doing these webinars with people that we're bringing on, experts in different areas. The last one we had Lenny Gray, and that was awesome to hear from the Door-to-Door Millionaire. Been in door-to-door for 30 years, and he had a ton of knowledge on sales and all that stuff. And so those will be with special guests that we have every 2 weeks. And then we run a call every week as well that just talks strictly about rep card. I can't remember when. I want to say it's on Wednesdays, but look out for that. We're going to have push notifications going out, but that's every week as well. We'll just talk about different ways and how to maximize rep card. And then there's a Q&A on that as well. So there's a chance we might start doing those daily, just to have more content going out and given, the availability to more people. So anyways, let's wrap it up. Paul, do you have anything else you want to throw out?
No, I appreciate being on. And your relationship as business continues and as business grows, your relationship with a good CPA is important. That doesn't need to be with me. If you've got a relationship, keep it, but drive deep with your relationship with your CPA, and it'll pay significant dividends back into your pocket in the long term. So no, I appreciate it. I love being on. I love rep card, what it stands for. It's helped my own business. So Brad, I appreciate you.
Yeah, appreciate it, Paul. And yeah, guys, like he said, whether it's Paul or someone else, investing into a good CPA and finding that is so valuable, because it's like buying one of those coupon books or buying one of those $20 cards from the guy that's raising money for high school football or whatever. Like, you're spending $20, but you're going to get that back. Like, you're going to spend money with Paul or whatever CPA, and you're going to get that through tax savings back. So if you're on the front side of this and it's new to you and you're used to using TurboTax or not paying taxes, like, put the 500,000, 2,000 bucks, getting this LLC, getting the S-Corp, getting, a year of tax help from a CPA, and then just make that part of your yearly thing. And, you'll thank yourself in 10 years, you'll look back and you've saved tens of thousands of dollars, versus in 10 years, you're going, I'm in a huge hole and I've got to figure out how to get out of this. So appreciate you all. As always, go crush it in the field. I'm excited to, see people win. And we'll go from there. So have a great Thursday, guys. Peace.